Welcome back to a brand new YouTube video. Today I'm going to be showing you how I made over $6,000 last week trading Nasdaq, trading the unicorn model and also the inversion fair value gap model. And I'm going to be showing you the two trades that we actually took inside my trading Discord, which made me that amount of profit. And I'm going to break down every single trade, show you how you entered, and also show you how I managed the trade when I'm actually inside of the position. I have just recorded this video before and the file corrupted as I was editing the video, so my throat is absolutely killing. I've just filmed a 30-minute video and the file got corrupted. So yeah, please like this video, subscribe to my channel if you haven't already. If this video gets over 25 likes, then I will post another video in the next couple of days. If we don't get 25 likes, then I guess you guys didn't enjoy the video. So as you can see, on Friday we caught this nice 2.2 risk to reward on Nasdaq, and this was a perfect A+ setup to end the week off with a nice win. Every single day before you come into the market or before you take a trade, you should at least have a daily bias. If you haven't got a daily bias, then you might as well fire a gun and not know which way the barrel is facing, okay? Because you don't actually know what you're targeting, you don't know where you're going. So daily bias is extremely important. Get an idea of what you want the market to do before you even see price action. I will show you how I get my daily bias. So on the 4-hour time frame, on Friday, you can see that we're actually delivering from a bullish fair value gap. We'd swept internal lows here and we were delivering massively with this huge bullish wick to the upside. Okay, so the 4-hour is bullish. The 1 hour was also inside of this huge 1 hour imbalance here. So I was expecting this to be respected and continue higher. So the hourly was bullish, and also the 15-minute is also bullish. We are delivering from bullish fair value gaps, and we are also inversing bearish gaps. Okay, so that is the bias out the way. I was bullish, I was looking for long positions, and that is now where you need to mark out your targets. So if we do get a long position present itself, where is a valid place to actually target? And here we have got the 9:30 open candle, which is really the only level of buy side that I was interested in, okay? Because price typically tends to come back to the 9:30 open candle and take out, that first candle of the New York session. So that was my drawn liquidity for the day, okay? Not only that, we have got a few internal highs as well, which are valid. So I marked these out just in case we do target these levels as well. You can see that we are now inside of the first AM macro, which is 9:45 to 10:15. So, of course, if you've seen my videos before, or you are an experienced trader, you will know the first thing we need to see before we take any long position is a super sell side liquidity. So we need to see sell side liquidity get taken before we look for a unicorn model, or if we look for an inversion fair value gap model, we do need to see sell side taken as well with a bearish fair value gap. And you'll see we come down, we sweep sell side liquidity, but we get no gap left behind, so we can't use an inverse. And also, we don't get a breaker structure on ES or Nasdaq, so the unicorn model is still no longer valid. Now, I don't trade the unicorn model outside of macro timeframes, okay? So when I'm looking for a unicorn model, it's only inside of the macro timeframe, which is, of course, 9:45 to 10:15 or 10:45 to 11:15. If I don't get an entry inside of that 30-minute window, then I will not enter a unicorn model. The inversion I enter at any time, okay, and that's what this trade was. But now that we are outside the macro, I'm no longer looking for a unicorn model. So at this point, I'm only focusing on inversion fair value gaps. And as you can see right now, we have literally got 0 bearish gaps to be inversed to target the highs. Okay, so at this point, there is no trade at all to be taken until we get this nice sweep on sell side liquidity here. Okay. So this is perfectly what I want to see. We come down, we perfectly sweep sell side liquidity, and we don't even close below. Okay, so it's a clear sweep on liquidity, and we also leave behind this 1-minute bearish fair value gap. Now, if this doesn't stand out to you on the screen and doesn't scream out that this could be a good trade, then you need to do more backtesting. You need to get more education, because on the face of it, this looks perfect. Okay, absolutely perfect. We've got equal highs internally as well, which are a good draw on liquidity. And also we know that we're bullish, or we're hoping that we're bullish, because we are anticipating our daily bias is longs. Okay, so now we've got the sweep on liquidity and we've got our bearish gap. All we need is this bearish gap to be broken and inversed. Okay, and you'll see in the next couple of candles we actually come straight back up with displacement and we inverse this bearish fair value gap. So this is now where I took a long position, and everybody on my daily live streams in the Discord also copied this exact trade, and we all entered a long position targeting a fixed 2-to-1 risk to reward, okay, which so happened to be perfectly this internal high. Of course, not every time is it going to be perfectly 2-to-1, but for this trade, it just so happened to be perfectly at this internal level, okay, and our stop loss is going to be at the body of this bullish displacement candle. Now, the reason we put it below this gap, okay, is because algorithmically, price should respect all bullish PD arrays, okay? If you're in a long position and, you know, you want price to go higher, then you should see price respect all bullish order blocks, all bullish fair value gaps, and just continue pushing higher to the objective, okay? If it doesn't do that, then chances are, you know, the trade actually isn't what you think it is, okay? And it's not going to go where you think it is. So our stop loss can go safely below this bullish fair value gap, because if he inverses this and breaks this gap, then, you know, we're going to get stopped anyway. So there's no point running your stops all the way down here, because if this bullish gap gets broken, then it's going to hit stop anyway, okay? Hopefully that makes sense. So this is now our trade. Here we entered a long position. Of course, TP is at high and stop loss goes here. So we are now in this long position. We have inversed a bearish fair value gap, and this is now where you need to manage your trade, okay? This is extremely important. This is where a lot of people go wrong and actually cut winning trades short, and, you know, don't give the trade enough breathing room to actually go in their favor, okay? Because people see price go a little bit in profit and go straight to break even. Like, you know, the chances are you're going to get hit for break even, and then it's just going to run to your TP. Now, if that's always happening to you, and that, you know, if you feel like you're always getting tagged at break even, then the chances are you're being too strict with your stop loss, okay? You're getting too scared in the position, and you're not giving it enough room to actually breathe. And I'm going to show you now how I actually manage my trade every single time I'm in a long position. So the way I actually manage is by following price up every time we make a bullish PD array. And as you can see right now, we are currently up around 30 handles, and I have still not moved my stop loss from 33 handles in risk, okay? Because nothing has shown me here that we are displacing higher and we're going to go all the way up to here, okay? The only bullish gap we have actually got right now is this one here, okay? So I need my stops to remain below all PD arrays that can push price in my favor. So, for example, if price wants to come down and tap into this gap, I need to give my stop enough breathing room to allow it to do that, okay? And that is exactly what I've done. Until another bullish gap gets made, or a bullish order block, then I will start moving my stops. So as you can see, here we take out that first internal high, and again we have made no bullish PD arrays whatsoever. So again, my stop loss is staying exactly where it is, until here. Okay, so until this exact candle now, we make a bullish fair value gap, which is the first one since being in this long position. Okay, so now we've got our first bullish PD array. This is now where we can start trailing our stop loss below this first low. Okay, so now we have just dramatically reduced our risk to only 8 handles in profit. 8 handles, sorry. And the reason we move it to this first low is because, again, we've got a bullish PD array that price should respect if we're going to move algorithmically. But the reason I didn't go to break even is because we've got equal lows. Okay, if I move my stop loss to here, the chances are price might come down, wick these equal lows, and may actually tag me out. Okay, so just to be safe and give it enough room, I'm just going to leave it at 8 handles in drawdown. If that hits stop loss now, I am not really that bothered. Okay, I've lost 8 handles, and I am targeting over 67 handles. So it doesn't really matter, okay? But of course, I want to see price respect all bullish PD arrays. So as I play through, you'll see we come down and actually tap into this 1 minute gap. Oh wait, no we don't. We actually make another 1 minute gap, sorry. And we tap into this gap. Okay, so here we get another displacement leg up with another 1 minute bullish order block. Okay, so this is now where I can actually start moving my stops into profit. Okay, because we were extremely close to TP. We are running 58 handles in profit right now. We're only 9 points away from full TP. So this is now where I move my stops below the body of this bullish gap here. And that is because we have got a bullish fair value gap here that we should respect. we've got a bullish order block we should respect. And if we don't respect those, then hopefully we respect this bullish gap as well. Okay, so we've got 3 PD arrays all stacked on top of each other that we should bounce off, at least one of them, and continue to our overall objective. If it doesn't do that, then of course we're probably going to come down anyway, and that is why my stop is now in profit. So I'm guaranteed to make at least $400 on this trade and around 20 handles in profit. And you'll see perfectly, we tap into this bullish gap, get a bounce, and smash our full TP. Okay, for 67.75 handles, that is a full TP trade, and we only went into 8 handles of drawdown, which is perfect. Okay, amazing trade. So let's jump into the second trade example. So jumping into the second trade example, which was the second trade we took of the week. It was on the Thursday, so we caught back-to-back winning trades to close the week amazingly with over $6,000 in profit. This was actually a unicorn model, and this was in the lunch macro. Okay, so the lunch macro is 11:45 till 12:15. So we had no actual trades during the New York AM session from 9:30 till 11. So I trade, again, all 3 macros, only looking for the unicorn model. So, of course, the first thing we need to identify, again, is our bias. So I do it the exact same way I've just shown you, and I look at the higher time frames. So the 4 hour is clearly bullish. We are delivering from bullish fair value gaps, and we've also swept sell-side liquidity. So the 4 hours bullish. The hourly is also bullish because most recently we are actually respecting these bullish gaps to the left. Okay, yes, we have tapped into this bearish gap, but most recently we are delivering from bullish gaps. And on the 15 min, it is completely neutral because it's extremely choppy. And then to the 5 min, we are inside currently of this bullish fair value gap to the left. Okay, we haven't actually inversed it. We almost did, but we are still inside of it. So I'm anticipating, that we do respect it. Until we get an inverse on this, then I will be bearish on the 5 min. But right now we are still inside. So the 5 minute is bullish, the hourly is bullish, and the 4 hour is bullish. Okay, so I'm looking for longs, and that is how I get my bias. Simply off imbalances, and where price is respecting from. So now I know I'm looking for long positions. Of course, the first step of any strategy is a sweep on sell side liquidity. So already I have marked out both levels of sell side that could be valid to look for longs from. So what we've got to do is simply enter this macro and get our sweep, which here we get our sell side liquidity sweep perfectly, which again, we don't get a candle body close below at all, which is perfect to see. All we need now is our first internal high to be formed. Okay, if we're looking for a unicorn model, we need to see a bullish break of structure if we're looking for long positions. So here we make our first internal high of this lunch macro, which is perfect. Okay, we've set sell side liquidity. We are clearly delivering from bullish gaps on the higher time frames. So all we need to now see is a break of structure to the upside. And you'll see a couple of candles in, we do actually make another internal high. Okay, so this is really important. When you're trading the unicorn model, you need to use the most recent internal high or low as your break of structure. So it's no longer waiting for this to be broken. We are now waiting for this high to be broken. Okay, because this is the most recent internal high. Hopefully that makes sense. If you actually wait for this to be broken, the chances are you're going to get a poor entry because the entry was much lower down. Okay, so you want to be waiting for the most recent high to be broken with displacement on both pairs. Okay, so ES and NASDAQ have got to break the same high or low at the same time. So here we end up chopping around a bit, and eventually we do actually displace through this internal high. Okay, so here we get our bullish break of structure, and this was happening on both pairs. Now, of course, now you've got your bullish break of structure, we are inside the macro. We've also got another sweep on sell side liquidity again, which is perfectly valid. We don't close below this low, so we are remaining bullish, and here is our break of structure. Of course, all we need is a fair value gap to enter from, which perfectly we leave behind here. Okay, so this is now where we've got our setup, we have got our model, we are at 11:56, so perfectly inside of the macro, and we have got our targets. Okay, so the first target of the trade is going to be this internal high here, and for full TP is going to be another 2-to-1 risk to reward. Now, this was extremely important and a lot of people actually missed this. So if I get this out of the way a second. What a lot of people missed when they entered this trade is that we actually left behind a 1 point fair value gap, okay, down here. Now you may be thinking, why am I marking that out? It's completely irrelevant, you can't even see it. That is where you are wrong, okay? Every bullish PD array is absolutely valid, okay? No matter how big it is, how small it is, every single bullish PD array you need to mark out because price should respect it, okay? And it's going to be crucial when you are doing your stop placement. Now, if you're in a long position, your stop needs to be below anything that can push price in your direction, because we need to give it enough room to actually respect this gap and bounce. Okay, so I feel comfortable and safe with my stop below this low for 25 handles on the dot, okay? And this is now where you need to get your fixed 2-to-1 risk to reward. This first initial high is only a 1.58, so we can't go there. The next internal high is perfect at a 2.07, so we're going to target this high as our overall take profit level, okay? So this is now where you set your limit order on the fair value gap and you wait to be tagged in, okay? So here we get tagged in, our stop loss placement is there at 25 handles, and you can drag your take profit to that 2-to-1 risk to reward high. Okay, the first internal target is this level here. The reason we target this level is because simply there is no other internal levels until here, okay? So now we are just waiting and seeing how the trade plays out. We have perfectly followed our model, okay? We've got the breaker structure, we're in the macro, we are bullish. So if this trade hits stop loss, I simply do not care because I have followed the plan that I know works long term. And that is how you should feel about every single trade you enter. If you follow the risk management, you followed your model, then what are you scared of, okay? What are you scared of? It's either going to win or it's going to lose. There's only two outcomes, okay? Once you accept the risk, you go completely emotionless and just let it play out. So we're now in this trade. I've accepted the risk. I'm going to lose bang on $500 on this trade if it loses, or I'm going to make $1,000 if it wins, okay? And my stop is below both of these bullish PD arrays, which we should respect. And look how important, okay, look how important this 1 minute gap ends up being. Okay, so we completely smash through this first 1 minute gap. Look at this reaction we get from this 1 minute gap. Okay, we perfectly tap into this tiny 1 point fair value gap and get a huge reaction up. And that is why it's so important to put your stop in a safe and comfortable position. And look, that tiny 1 minute gap actually pushes price all the way back up into our favour. And again, I cannot stress enough why it's important to zoom in and mark out all PD arrays. And the first target is actually going to be this most recent internal high that we formed here, okay? Because if we break this high, then we are actually breaking structure again to the upside, which of course is what we want to see. So we're just waiting for this high to be broken. And you can see straight away we absolutely smash straight through it with a huge displacement, which clearly tells us that the trade is going in our favour. So now that we have made bullish PD arrays, the exact same as before, where are we going to move our stops to? Okay, we need to give the trade room to actually tap into these gaps, but we also need to move our stop loss. So for now, I put it below this swing low here. Okay, not dramatically following it and chasing price, because I still expect price to tap into these imbalances and bounce, and the next candle hits our first target. Okay, so now we are literally 3 handles away from full take profit. So this is now where I went completely break even, because we have got 2 bullish PD arrays that we should respect from and hit our TP. Okay, so now we're completely risk free. All risk is off the table, and we are targeting our 51 handle TP. And the next candle smashes straight up and hits our take profit level. So yeah, that was another full TP, 51 handles and 70 handles secured on the previous trade. So that is how I made over $6,000 this week trading NASDAQ using the unicorn model and also the inversion fair value gap. Hopefully you enjoyed this video. If you did, make sure you like the video, it really does help me out. Subscribe to my channel, I'm so close to 1,000 subscribers. Also use my discount code for Alpha Futures, and I will catch you on the next video.